Now let's look at Labor's capital gains tax, whether it'll have any impact on the property market. Infometrics Chief Forecaster Gareth Kiernan with me this morning. Gareth, good morning.
Morning, Ryan.
You've had a look at it. What do you reckon?
Yeah, I mean, it's not a lot of detail in there, which is sort of symptomatic of a lot of Labor's policies at the moment. But yeah, look, if you're a property investor and this policy comes in, you are going to be generating less returns from your property. Well, the returns will be the same, but you're going to be paying 28% of any capital gains that you get going forward to the government. And so your overall return, if some of it's coming from the rent, some of it is coming from the house price gains over time, your return is going to be lower going forward. And so there is potentially a sort of a shift in the relative returns you're getting as an investor there versus what you could be getting on your money elsewhere. So potentially a bit of downward pressure on house prices coming through from this, but not an instant fix for the sort of affordability issues that we've had in the housing market for some time.
Gareth, they keep talking about Australia. The Aussies, I mean, the median price in Sydney's 1.9 million. It's something like 900 here. It's not exactly a panacea.
No, that's right. And it is interesting when you look at some of the other things that are being done to try and address the affordability issues at the moment by the current government. For example, you look at the efforts to improve the supply of land and fund some of the infrastructure associated with new housing to facilitate more housing becoming available as well. You look at interest rates and the trends in those over time, the fact that interest rates are structurally a lot lower now than they were 30 years ago as well. Both of those have also contributed to the way that house prices have evolved over the last 30 years. And so it's you look at Australia as well. One of the other issues they have over there is one of the ways they try and address housing affordability is that they actually give more money to people trying to purchase their first home, which, if anything, tends to push up the price of housing as well. So no, I mean, you look at elsewhere, there may be a bit of a shift in terms of property prices and house prices, but overall it's not going to fully address the affordability outcomes that we've got.
Gareth, the other thing, you talked about investors, landlords. My big question for Chris Hipkins today is what are you doing with interest deductibility? Because if you're kneecapping people on the capital that they can gain from being a landlord, providing a house for someone to live in, and at the same time hitting them with the, bringing back or removing the interest deductibility, then that makes, particularly for younger rental property owners, you might have your wealthier ones who don't have a mortgage, but if you need a mortgage on that second property, then it's going to become very unaffordable for you to continue to run it.
Yeah, that's right. I mean, and I think that I would be surprised if Labor does go back down that policy with removing the interest deductibility as they had previously. But you're right. If you had that in place as well, it's very much a double whammy in terms of the income and the returns that as an investor you can generate off your property, and ultimately it becomes not an investment that's going to be worthwhile or viable for you if you do have a big mortgage.